Welcome to our home buying tips series, and our topic today is what are points and should I pay them? Points are prepaid interest. If you prepay some interest to the lender upfront at closing in the form of points, the lender will offer you a lower interest rate over time, similar to the old adage, pay me now or pay me later. However, you do not have to pay points. You can obtain FHA, VA, USDA, rural housing, and conventional mortgages without having to pay points, despite what some lenders, some mortgage brokers may tell you. Interest rates and terms are typically spoken with some type of point language. For example, the rate is 4% with 0 points, or a similar rate with maybe a half or a quarter point. You do not have to pay full points. A good mortgage banker will have various rate and point options to fit your defined needs. Difficult for consumers, though, is sometimes points can be disguised as extra origination fees, discount fees, or broker fees. So just asking the question, what are your points, rate and points today, you have to ask the question, what are the total lender fees required from you for me to obtain this mortgage at this interest rate? 1 point equals 1% of your mortgage amount. On a $100,000 mortgage, 1 point equals 1%. 1% equals $1,000. 2 points, $2,000. 3 points, $3,000, and so on. The reduction in interest rate by paying points will vary depending on many different factors, such as your loan program, credit scores, loan amounts, and most importantly, just the day-to-day and intraday movement of the markets that affect interest rates. Interest rates are like stock prices. They change every day and can change during the day also. A normal rule of thumb, but certainly not exact, is 1 point paid will reduce your mortgage amount by 1/4%. 2 points will reduce your mortgage by 0.5%. And again, that's a rule of thumb, not exact. On this chart, we're looking at a $150,000 mortgage amount, and 6%, 0 points with a principal and interest payment of $899, 0 points, so 0 point cost. But you can see as I pay more points, I can obtain a lower interest rate. Lower interest rates, lower payments, but an increased cost for the points at closing. But I do get lower payments, so I save money each month. To determine my break-even point, take your cost of the points divided by your savings. This break-even point tends to fluctuate between 60 and 64 months, depending on the cost of the points. Buyers typically pay their own points. However, many loan programs do allow sellers to pay your closing costs and to pay for points if you can negotiate accordingly. And secret tip here for home buyers, this is an excellent way to get points paid for you to get a lower rate, lower payment at the seller's expense. Does it make sense to pay points? Well, yes, you're going to get a lower payment. You're going to save money over time. Points may be tax deductible, but you have to ask yourself, is this the best use of my funds? Should I be paying off other consumer debt with higher interest rates? Should I be saving for the future? Should I be putting money into a slush fund? What happens if rates go down and I want to refinance my mortgage? Have I recouped my points paid up front? So lots of questions asked. And again, consulting with a good mortgage banker will be of much benefit to you. If you'd like more home buying tips similar to this, go to youtube.com/fairwaypa. And if you'd like to talk with a licensed mortgage banker about your home financing plans, call us at 717-431-9299.